This time, it's different. A turn of phrase that many of us feel jaded by, considering what's happened to silver the last time that it reached near these levels. But maybe it is. According to an analyst, he feels that we're going to continue to see this rally play out, and we're not going to see the big crashes that we saw after 1980 and 2011. I'll explain why and how as we explore. Now, as to whether or not I agree with him, I'm still on the fence to some degree. I do believe that this time is different, but I'm going to be referencing a piece here from the Bubble Report from Jesse Colombo about a rally that we're seeing with silver and why it is different and why it will continue. He says that silver is rallying strongly and rising more than 50% since the start of the year, which is a growing number of investors have started to worry that a crash may be coming, similar to what happened after the major spikes in 1980 and 2011. But he says that instead of focusing on the incredible long-term opportunity that remains in front of us, instead of worrying about any kind of crash in the market. He's one of few analysts who correctly identified the bull market in both silver and gold from the very beginning. He's urged investors to stop dwelling on negative sentiments and scenarios and instead recognize the tremendous upside that still lies ahead. This is silver's moment to shine, and is also a moment of vindication for those of us who believed in it all along, even when it was ignored by the mainstream financial world and left for dead as recently as just a few months ago. And he's going to explain here why silver will not repeat the sharp collapses that we saw in the short-lived surges of 1980 and 2011. He says this time is different in bold letters. This is a legitimate, sustainable bull market with real staying power and the potential for lasting gains. Now, I do agree with him in part on that, but let's hear him out through this process and see what we can take from it. Before we go any further, there will be dips, we know that, and buying opportunities will make themselves known. My friends at Summit Metals know this all too well, so next time you're in the market, check them out. The link is in the description below to experience a great customer service and fast shipping. Now, he wants to show that the long-term price of silver over the past 6 decades, back to the 60s, there's been 3 major price surges. The first was the Hunt Brothers-driven spike in 1980, followed by the quantitative easing-fueled rally in 2011. By the way, that rally led to physical demand for silver, which also helped move the price up. It's very different than what's happening now, by the way. And now the current precious metals bull market that we find ourselves in right now. He believes this current move is legitimate and sustainable bull market that is here to stay. If you look back in 1980 and 2011, silver surged towards the $50 an ounce level. But that is where those rallies failed and quickly reversed. In fact, technically, they didn't actually get to $50. They fell a few cents shy of it. So that $50 level has become a critical price ceiling and resistance level, and it still is to this very day. And he has been calling for a silver bull market even when silver was still in the $20 range. He pointed out that the $50 level is the key one to watch. He believes it would act like a magnet and draw the price of silver towards it, since major psychological levels have often this effect. And sure enough, silver has steadily climbed towards that level, and we are within spitting distance of it right now. In fact, right now we are less than $2 away from it. As the time of writing, it's extremely close to breaking through that key $50 level, which is a major make or break point. And many investors bought significant amounts of silver and bullion and ETFs through the frenzy of 2011, but when the prices plunged afterwards, they were left holding the bag, and many have been sitting on losses for the past 14 years, and I've covered that as well in a topic in a video about how somebody made a huge buy during that time, and they had to sell at a massive loss, and that was a big mistake on their part. But once silver finally surpasses $50, which will mark new all-time highs, nominal highs, by the way, no silver investor will be sitting on a loss, at least in nominal terms. The fact alone makes the $50 level a critical psychological barrier that will trigger a surge in investor sentiment once silver breaks above it. My guess is most of you watching this video right now have not bought silver at these levels before ever in your entire life. And there's probably a few of you who were around during the 2011 high and probably bought maybe very few ounces, but likely probably not a whole lot. Until recently, many silver investors or stackers remained deeply discouraged by years of losses and underperformance, but a decisive breakout above $50 will mark the beginning of an entirely new era for silver, and will set off a powerful virtuous cycle, he says. Many more investors will pile in, including new and younger participants who never considered silver before and who are not burdened by the baggage carried by older, battle-scarred veterans. This explosion of interest will help drive silver to incredible new heights. People tend to come in on the bull market on the way up. That's when people start to buy. They buy high and sell low, which are critical mistakes. But nonetheless, if you feel it's going to continue to climb up and it's starting to make major news, well, that's what's going to happen. And we saw that to some extent in 2011, but then people got burned. So hopefully these new stackers will realize that, you're going to see volatility in the market. That's part of what holding silver is. Holding being the key word. I believe in having diamond fist when you have your silver, and you hold through the ups and downs of the market, and that is crucial and very important to understand. And he adamantly believes silver is going to surpass $50, Mr. Colombo does, and go much higher from there in the near future. However, there is something that needs to be pointed out. Silver has surged so strongly and so quickly, it is a bit extended in the short term, which makes it likely that it will consolidate or pause before eventually breaking through $50. In other words, right now, we may see a period of frustration as it doesn't press through. We may see other smackdowns in price and not get there because it's a very strong resistance point. And we can see that in the relative strength index, momentum indicator, which provides overbought or oversold readings for assets. And he really does believe in that. He also believes that overbought in the current one, silver is not an automatic signal to sell or an indication that the bull market is over. And there's a very high likelihood that silver will experience a shallow pullback or move sideways for a time to work off its overbought condition. This would conserve energy for the next leg higher when silver smashes through the $50 ceiling. And he called on the last day of April that gold would likely consolidate temporarily but not crash, and that's exactly what played out in the following months, setting gold up for an impressive rally that it is experiencing today. A similar scenario is likely to play out in silver, and he welcomes that because he would rather see silver rise in an orderly, more sustainable way than risk burning itself out. And accumulation mode is something we have to think about, which is why you have to pay attention. I think it's a good idea to see where things are at and wait for those dips or periods where it's kind of stagnant for a while, a holding pattern to make your buys and dollar cost average in. And so that is pretty interesting to see that play out and where it could be. We're in an overbought situation right now, and usually when it falls below a 70 indicator is kind of where you want to kind of get back in there, according to the RSI. And so this is interesting, how this is different than 2011 and 1980, that while $50 is a key nominal and psychological price ceiling, silver will break through its decisively, even if it pauses first to work off its overbought condition. It's important to consider how much inflation has occurred over the past several decades. In real terms, the price of silver remains much lower than the previous peaks. And $50 in 1980 or 2011 is certainly not the same as $50 in 2025. That's something else that I've been preaching on this channel for a long time. He's exactly right there. And so anybody who's been buying anything from groceries to automobiles to homes knows this firsthand. And when we see the price of silver in 1980, when adjusted for inflation, is around $216 or so. And back in 2011, its peak was about $72 or thereabouts. So that is very different when you adjust it for inflation. That means that we have quite a long ways to go. And in reality, the 1980 peak was essentially two brothers and the reaction to what two brothers did to corner the silver market. There are other mitigating factors as well, too, such as inflation, that it was high then as well. But it was really big time, the Hunt brothers. That was an anomaly, such a huge anomaly that it really should not even be considered in analysis. But the 2011 peak, well, $72 is something that is very doable in the course of the next couple of years, and maybe even sooner than that. And so I think he's thinking that perhaps that might be the case. And now with silver trading at 48, which is much lower than either of those peaks, and inflation where it is quite possible that we have a lot of room to move up, and it could move up there quickly. And we know also something else to consider here that we've not seen before ever in human history, and that is the M2 money supply. How much cash is out there? How much of these dollars, whether they be digital or printed, is out there, more so than ever before in human history. And that was something that we did not see or starting to form in 2011, but it really went into overdrive in 2020. And really just now we're starting to kind of see the effects of that play out. It's a more accurate measure of inflation than the consumer price index used to create the previous chart that he's talked about, where he's those numbers. After all, the root cause of inflation is growth in the money supply itself. As Milton Friedman, the Nobel-winning economist, famously said, inflation is always and everywhere a monetary phenomenon. And so I think that is a lot of the reasons. But there's other factors, too, that Jesse Colombo didn't cover in his article that continue to persist. Central banks holding on and buying more gold is a very important factor because that has helped propel silver. And we can't be shy about that for sure. Silver is benefiting from what gold has done. The other factor is the wider range of uses for silver now than ever before, with over 10,000 of them. And we didn't see that as much in 2011. There's more diversification. There's more demand now than it has been. In fact, we're on a fifth year of a deficit or near deficit in silver. And that is not going away anytime soon. That's another bullish driver, I think, for this metal, which is another reason why my diamond fist is tight, holding on to this silver bar and other silver bars, like the other ones you see on your screen here. So there it is. So let me know what your thoughts are about this bull run and why it is here to stay. And I think that likely we may see some consolidation once we peak out, but where that will be will just depend on the peak. So let me know what your thoughts are in the comment section down below. I'd like to extend a multitude of gratitude to each and every one of you for taking the time to watch, and to encourage you to please rate, share, comment, and subscribe.